Where is Palantir going? Is it going to $50 next or back to 15? Should you make an entry now or keep earning interest with a savings account? Hi everyone, I hope that you had an amazing day and lots of profitable trades. In this video, we're going to talk about Palantir and see if it can make you a lot of money. As we know, over the past few years, things haven't always been great in terms of jobs. Companies once considered as holy grails for those looking for gainful employments are now reducing their workforce, and it's been a traumatizing experience for many of us concerned. At the same time, the rapidly rising inflation has been eating people's savings away in many parts of the world that has only known inflation for many generations. When every assumption about the reality gets blurry, we gotta seize that opportunity and really work on ourselves towards the financial independence. One key factor to improve our financial situation is to spot the growth opportunities of tomorrow and seize the ones that may multiply your capital exponentially, increasing the money available for subsequent projects. Essentially, we need to find the golden goose, and for many, Palantir is exactly what we need. Over the past few years, much more than yet another tech stock, begging for your money in terms of like covering their expenses in exchange of blue sky and empty promises, it became a major player in the sector that may tell us a lot about the market appetite for risk exposure and if the tidal wave is ready to rise all ships once again. The company has enough reputation and prestige to arouse the market's curiosity as well as people's tendency to follow trends. It is a company that people often view equally as the risk appetite of the market, alongside others like Tesla or Nvidia. So Palantir's reactivity to the macroeconomic tidal waves makes it a very interesting company to analyze, to follow up, and to perhaps invest in. So in this video, we're going to make a deep dive into Palantir and to see whether it deserves to have a place in your portfolio. Before the video continues, I just want to take a moment to say thank you for coming to my channel and hope that you're going to enjoy your stay and to come back for more content. If you like what you see, please consider to like, subscribe, and to check out my channel for playlists of companies I cover. With that being said, I hope you're going to enjoy today's video and let's get started. Over the past few days, Palantir has been able to climb to around $27 level, and it reacts to various signals coming from the US economy. It marked a pause while maintaining itself above the $25, which is a pretty high baseline, as the market is now mostly in vacation mode in preparation for a more eventful autumn. Over the course of past few weeks and months, despite the absence of significant catalysts, the drift of very light summer trading volume, and also many attempts to push Palantir lower, its price action has been able to hold itself above the $20 level, while looking for consolidation, which eventually occurred. Some additional reasons might include the upcoming rebalance of S&P, the doubts over Palantir's capacity to maintain its growth rate in public contracts. These elements are enough for many shareholders to take profit while waiting for a better entry point. Some may also believe that short selling can be a good idea given the price action's pullbacks. Due to the nature of its shareholder base, Palantir has always been a stock made of momentum and a large dose of anticipation and self-fulfilling prophecy, instead of cash flows and financial results. The fact that it acts like its actual financial results are decent are certainly, hopeful, but not good enough to support its current valuation, and certainly not enough to keep the price high, or higher still. We can see that its widening scope has recently grabbed the market's attention a lot more than anything else that can be printed on a piece of paper. So far, the resistance turned support level is $25, above which the new goal to surpass are, $30 to $35. With support levels between 20 and 23, providing a lot of stability and choppiness to those who want to short sell. Those levels are very important for investors because they are potential areas of price reversal or continuation, depending on the trends that we're aiming for. The short-term trends for Palantir stock appears to be bullish. The previous decrease in both interest and volume from investors are now old stories. While the overall trend stayed very much bullish, the short-term weakening momentum didn't transform itself into larger market sell-offs. And in terms of volumes, I would say that usually it'll stay between 20 to 30 millions, with occasional peaks between 50 to 70 million if we look at the past few months. So from a longer term perspective, Palantir has a pretty interesting price action pattern because it's sitting right above a plateau before, like back in 2021, it led to a sell-off that lasted for about a year and a half. Over fundamental levels, Palantir has always gathered a lot of interest from retail investors since its initial public offering. This could be even one of the weaknesses for Palantir's long-term outlook, because the fact that institutional investors don't want to go in at the current price could mean that, they think that Palantir is a little bit expensive. So this increased presence of retail investors kind of also explains why Palantir is known to be a very volatile equity for a company of its size. Ever since its debut in the secondary market, any sort of sentiment has been very reactive, with investors eager to piggyback on anything that they think is a momentum or a trend, including its innovation, what its CEO looks like, the interest rates, the tech sell-off, and the doubts about the company's long-term future back in 2022. So of course, Palantir's journey in the stock market has often been characterized by intermittent periods of bullish enthusiasm, followed by prolonged sell-offs, dipping at one point below the $10 mark. A significant point in Palantir's price movement is the correlation between fundamentals and the macros. Like events such as geopolitical uncertainties, supply chain problems for large sectors, interest rate decisions or indecisions, or government regulations for narratives like AI or data, or maybe one day genomics, may have significant impacts for the share price and simultaneously affect the company's own news regarding its financial performances and guidance. Now, the relevance for analyzing news like themselves can be pretty limited for the simple reason that those news tend to reflect the price action that already is and not really to point towards whatever that has been formed. So when the stock is on an upward trajectory, positive news, they tend to dominate headlines, feeling like a lot more optimism than there already is. And during downturns, the negative news cycles, they amplify the pressures, the existing pressure or the existing fear, which is also going to accelerate the trend that would be around by that time. This goes for most stocks, and the news articles might be an interesting way to confirm if you're blowing in the same direction as the overall wind, but not to tell you when the wind is where the wind is gonna blow, a year from now. As things currently stand now, Palantir has been able to maintain its bullish trend in the medium and long run, despite I would say, diminishing marginal increase for a time. And the stock has shown a lot of resilience in 2022 and 2023. So it's not because its pace accelerates or slows down that it necessarily means that Palantir has no future anymore, right? This is a company that we know that in the long run does have a lot of things going its way to make it a much more important player. So one factor that may influence Palantir's future performance is its status as a large cap. With its market cap increasing over time, Palantir is, of course, probably going to solidify its position and to keep rolling the existing snowball. So, large cap status often brings increased institutional interest and a broader investor base, an investor base that I would argue will become more patient over time. Despite the current bullish outlook, though, we gotta always be careful and skeptical and always question everything that we see. So of course we're now looking at the $30 to $35 region next, and why not maybe $50? But nothing is guaranteed. Those dynamics may change very rapidly. If you remember, Palantir went from $8 to 15 in a matter of weeks. Well, the same thing might happen again, but just the other way around, depending on the significance and the timing of those catalysts. So overall, there are many factors from a lot of different aspects which might, ultimately influence on your decision about buying or selling Palantir. Regarding financial performances, this is definitely one of Palantir's strong suits, but it's only enough to keep the stock above a certain level, since the stock has already been through a period of massive sell-offs back in 2022. The rock bottom could very well be below 10. With that being said, it's something to keep an eye on, since Palantir's financial reports are known to often move the numbers around. So the key levels that I tend to look at would be the cash levels, the gross margins, and the growth. For the first two, things are looking pretty good. Palantir isn't a company that needs cash in the short run. It's a company that has been having positive gross margins since before they were trading above $10. So what this means is that overall the company is healthy, and they certainly have more muscles to prepare their own futures, right? This is what we know. However, as time goes on, we also have to look at the third one, the growth, because we're not buying the Palantir that is. We're hoping to buy a Palantir that will be a few years from now. And the growth is key in this case. We're hoping that Palantir is going to grow significantly and hopefully beyond just the public sector. But recently when, it was said that, Palantir might not have a lot of growth, or not as much growth as we initially thought, with different public contracts, that put a lot of selling pressure on Palantir. So there's that as well. Now, with that being said, given its symbolic and size-related significance, investing in the Palantir often has its own ups and downs. There are different levels of considerations to consider that might influence your decision making. So one of the primary reasons people like Palantir is its growth potentials. It's often positioned and considered by the market as a leading player in the data analytics. So it operates in the field with a lot of promises for the future economy, as a lot of businesses increasingly rely on data-driven insights to inform decision-making and to drive innovation. Companies like Palantir are well positioned to capitalize on that trend. With its expertise in handling and analyzing large volumes of data, it stands to benefit from the growing demand for data-centric solutions across various industries. And the company's own financial stability is also a reassuring factor on its own. Because unlike many other tech companies that will operate for many years at a loss, and heavy loss sometimes, Palantir has already established a revenue-generating business model. This reduces the likelihood that people are going to face share dilutions with different fundraising rounds or capital raising rounds, which provides investors with a sense of stability and trust into the company's financial health. Palantir also demonstrated its ability to capitalize on popular trends, and right now the popular trend is AI. So it has effectively enhanced its visibility and appeal, and more importantly, it shows us it can capture the mood of the moment, which is also something that's very important as well. Now, of course, these are the upsides. Let's now talk about the downsides. One potential concern for investors is the possibility of legal contingencies about like privacy and data ownership. And sometimes like Palantir doesn't just argue with the small mom and pop shops that are not its clients, right? It's mostly the behemoth, whether they're from the public or private sectors. Sometimes they may argue with entities like the Defense Department. They want to keep the data and the client wasn't happy. So it's that sort of thing as well, which may give opportunity for a lot of legal proceedings to occur. And this is going to affect like negatively its operations and brand power, because any sort of like lawsuits that they're going to have for mass collecting data that they, of course, they need, but they may or may not have the right to collect, is something that may taste very bad in many people's mouth. So we got to be careful about it. Another thing, and we talked about this earlier on, is Palantir's dependence on the public sector for contracts and for growth projections. For companies like Palantir, government contracts can be very lucrative, and of course, not everyone has like the capacity to get them, right? But they also come with a certain degree of uncertainty and randomness, because the way that a government department functions or public sector functions is beyond the simple supply and demand of the private sector. So if they ever decide to cut back on spending or to shift their vendors, then Palantir may not have any sort of argument other than accepting these facts. So this could have like a detrimental effect on Palantir's revenue and also the projection of its growth, right? So if we were assuming that they're going to grow, let's say 20% in terms of public sector revenue per year, and they only grew like 8%, then they're going to have some problems. That's the kind of thing that I'm referring to, you know? And sometimes I feel like, of course, it's a bit overplayed in the market, but it still kind of translates into some sort of mood of the market when it comes to what do they think or what's their opinion about Palantir, right? Another potential downside is a shift of the narrative. We gotta be very careful about this one because, of course, it's something that might be an issue. Just remember, right now AI is popular, but just like EV has been popular years ago, doesn't necessarily mean that people are gonna go back to EVs and fintechs. Well, don't get me wrong, people like Tesla, but does it really mean that things like online gambling and fintech are gonna make a comeback? Probably not. Like, this is what I mean. What if in a few years we're talking about something else that's really popular, and then all the people who pretend that they have diamond hands actually just have paper bags, you know? So it's that sort of consideration as well before you make a choice into buying Palantir. And with all these, I believe that we should be good in terms of like having a 360 angle view on the issue. So right now, the global markets are facing a complex interplay of factors that have the potential to significantly influence the equities worldwide. In this speculative analysis, I believe that the consequences of the global inflation, surging commodity prices, and decline quantitative easing, as well as the rise of inflation rates or interest rates, plus the geopolitical instabilities, are going to play a significant part. The increasing inflation rate has been putting pressures across the globe, threatening the purchasing power, raising the input costs, and impacting corporate profitability. Companies operating internationally may face challenges in managing rising production costs and also to sustain profit margins. Those dynamics could trigger market volatility as investors adjust their risk return expectations. The upward trajectory of commodity prices, including energy, metals, agricultural products, have been having far reaching implications for various sectors of the global equities market. The companies heavily dependent on these commodities may experience squeezed profit margins, potentially affecting stock valuations and investor sentiment. The reduction or the end of QE's quantitative easing measures by the central banks worldwide may have resulted in reduced market liquidity. So, this in turn could lead to higher borrowing costs for companies seeking capital, which may also discourage investment activities or will. The elevated market volatility plus the reduced investors' appetite may also continue to occur. Now, the central banks around the world are tackling this delicate situation of balancing the inflation rates with the economic stability and, if possible, growth. Central banks opted for aggressive interest rate hikes to combat inflation. Borrowing costs for companies have been rising, which has also slowed down business activities and also fueling the market's volatility in terms of the equity prices. Now, ongoing geopolitical tensions, including trade disputes, political uncertainties, and social unrests, will inject an additional element of volatility into the global markets. Investors may adopt a cautious approach, shifting towards safer assets, impacting the equities. Additionally, the escalating conflicts may disrupt supply chains, negatively impacting the performance of international companies. Given the interconnectedness of global markets, the aforementioned factors have reverberating effects on the US equities market. Companies with significant exposure to international market may face a lot of headwinds resulting from the economic slowdowns, disrupting the supply chains and the currency fluctuations. But nevertheless, the US market is known for its resilience, and the diverse sectors may attract investors seeking safe havens. So, really, the current landscape is characterized by global inflation, surging commodity prices, reduced quantitative easing, rising central bank inflation rates, geopolitical instabilities, and also ongoing lack of certainty regarding growth. While the US market may exhibit relative strength due to the safe haven status, it's going to remain interconnected with the global economic landscape. For long-term investors, these conditions may offer opportunities to identify undervalued companies with strong fundamentals and international diversification. With that being said, short-term trades should be approached with caution because of the increased volatility and uncertainty. And also, we should be careful when assessing individual companies, sectors, or regions. Alright, so having said all this, what is my opinion about Palantir? Like, if I take it from the perspective of a hunch, then I would say it's a good company. It's the kind of company that I want to own in my portfolio. However, does it mean that it's a company that you should own now? Or does it mean that it's a company that you should dedicate the vast majority of your dedicated capital to it now? To that, I would say probably not. And it's less because of Palantir than because everything around it, right? We don't know what's going to happen a year from now. We don't know what's going to be the outcome of the election. So, for those reasons, I would prefer to hold on before buying more Palantir shares. Oh, and by the way, we also don't know what's going to happen with the interest rates. Personally, I highly doubt that we're going to ever go back to the Bernanke era of money printing at 0%, right? If that doesn't happen, then of course the room for upsides is going to be limited, mitigated partially by the fact that the world capital needs a safe haven, and regardless of any of its problems, the United States are a very central piece to the global markets when it comes to finding a place to park your money into. So for this reason, I would say slowly trickle in your position in Palantir. Buy it over the course of the next 12 to 18 months at least, and then hold it for a few years. The maximum exposure I would recommend is between 8 to 10% of your portfolio.